Welcome to Cambridge House Live. I'm Vanessa Collette here at the Vancouver Resource Investment Conference. I'm joined by Todd Anthony of First Majestic. Welcome, Todd. Great to have you here with us.
Thank you, Vanessa. Thank you for having me.
Todd, you guys made a major announcement this week that you're now a legitimate senior producer. How does that feel?
It's great. Yeah, we produced 10.6 million ounces of silver in 2013, which graduated us to become a senior silver producer. We have further growth this year. In 2014, we announced another approximately 20% growth to 13 million ounces is what we're targeting. But ultimately, over the next 3 to 4 years, our goal is to get to 20 million ounces. And that's with our current asset base. That's without doing any other kind of acquisitions. We can foresee ourselves reaching the 20 million ounces. And also, we broke through 10 million ounces on our 10-year anniversary as a company. So we're very happy about doing that.
Right, so just another decade, another 10 million ounces.
Yeah, well, hopefully less than another decade. Hopefully another half a decade or less.
Now, Todd, are you seeing change in attitude with Goldcorp's bid for Osisko? Are you sensing that M&A activity is picking up?
Well, there's always talk behind the scenes on the M&A side. Ultimately, though, it takes two to tango. The Goldcorp hostile bid to Osisko was, I think the market was waiting for Goldcorp to do something. But on the silver space, we've, as First Majestic, we've probably been one of the most aggressive silver companies out there. We've acquired 3 public companies over the past 6 years, and we're always looking. We've been very active over the past year, and we remain very active. So it's not that we have anything on the back burner right now, but we're always looking. And if we do decide to do something, it would be a similar bolt-on that we did as a transaction we did in 2012 with Silvermex, which is essentially a bolt-on mine. So that's kind of the same target or same type of asset that I think you could see us look around for.
Now, Todd, to cut costs, you've said that First Majestic is going to be looking to adopt some new technologies and some innovative ways of doing that. Can you tell us a little bit about that?
Sure. Well, we've been cutting our costs. Just in the second half of last year, we've cut costs by 10%. We were now around $9 per ounce. Some of the things that we've done, some new technologies that we've adopted over the last few years, for example, is automating our mills. Our La Paria mill, which we just expanded in 2011. 2012 was the first year, it was actually the 5th expansion over the 6 years that we've owned the company, 7 years. And it's a fully automated mill. So what I mean by fully automated, you can pull up on a computer and see exactly the different pH levels in all the tanks. You can see all the temperatures in the tanks. You can see exactly how much throughput's going through the ball mills. Previously, how the mills would operate was you'd have a guy and maybe walk up to a tank and use a plastic tube like you do for a pool, and you shake it around to see what the pH level is, and maybe it turns pink too much, so they need to throw in a bag of lime or some chemical. They come back in an hour, they test it, and maybe they went too far, so they throw another bag in to try to overcorrect. Now, having this new fully automated system, you see on a real-time basis the different levels of all the different chemicals. So ultimately what it does is it allows us to improve our recoveries, use less chemicals, and it's just a more efficient operation.
That's great. Now let's talk a little bit about some of the majors and how they've been cutting their exploration and development costs. Is this going to leave you without deposits to develop eventually?
No, we've cut back exploration quite a bit, but there's still lots of upside on our properties. We came into last year with about a $24 million budget in exploration. We've cut that back. We ended the year less than half of that. This year, our budget for exploration is only $8 million, so very small. We're not doing any kind of brownfield or greenfields exploration. We're just kind of keeping it around the mines. So, long term, the goal is to continue to expand the reserves and resources of the operation, continue to pull ounces out of the ground. But ultimately, I don't think there will be a fall off in reserves as a result of cutting back exploration.
Speaking of development, where does permitting stand right now for the Plomosas and La Luz projects?
Well, Plomosas and La Luz, the two projects that will become mines in the next couple of years. The Luce is probably a little bit closer. We should hopefully have the permits over the next 6 months or so. Then we will decide what we'll do when we'll announce the construction of that mine. Plomosas is probably another year or two away until we announce our plans for that project. But ultimately, it could end up, we'll see, but it could actually be around the same time that they both get permitted and we decide to both move those forward.
Now, you've included your all-in sustaining costs in your forward guidance for the first time. Is the market expecting more transparency in guidance these days?
I think so. Yeah, obviously, as the price of the metals come down, a lot of the investors wanted to see, at the end of the day, how much does it really cost to mine an ounce of silver or gold? The mining companies kind of shot themselves in the foot years ago by coming out with this this cash cost. They show they're producing silver at $5 an ounce and gold at, say, $500, and it really looks like you're making a big profit. And the governments see this as well, and then they think, wow, these mining companies are very profitable. So then they start talking about royalties and higher taxes. So ultimately, now the mining companies are coming out saying, we're not actually making that money, which is true. This is what our all-in sustaining number is, and going forward, I think the mining sector is going to have to go that route. And we are seeing, this is our first quarter that we've come out with our number. And I think for investors also, it allows investors to compare different companies, apples to apples.
Right.
So if you have one mine or one company that has more byproducts, they show a less negative cash cost. Compared to a company that's pure, they don't have the byproducts to add back in. So this will allow the investment community to kind of compare different companies in different industries.
Now, Todd, there's been a lot of concern out there about Mexico's new tax plans. How does this ultimately affect First Majestic?
That's right. They announced a 7.5% royalty on EBITDA and a 0.5% on revenue for gold and silver. Ultimately, what it's going to do for us is, we are going to throttle back our investment in Mexico. As I said, our exploration is down to only $8 million for this year. But we'll continue to operate as we are. We have to just be mindful of where we're investing our money. So, ultimately, at the end of the day, how much does that hit the bottom line? If you have the price of silver move $1 or $2, if you think about it, actually it offsets the higher taxes. So it won't change the way we do our business. We'll still stay in Mexico. We're still very active in Mexico. But for a small exploration company, it's going to be tough for them to come down to Mexico and try to grow a property, because now are not allowing the expensing of all the exploration work to be done in the same year. You have to amortize that over the next 10 years. So it's going to be tough for some companies.
Great. Well, Todd, congratulations on all your success, and it was a pleasure having you back here with us again.
Well, thank you, Vanessa. Thank you.